Hey guys, what is up? It's Andy here, back at you with another video, and today I'm going to be talking about everyone's favorite thing, and that is tax. Specifically turnover tax. So if you guys are interested or thinking about maybe subscribing for turnover tax as a company in South Africa, then you've come to the right place to find out a little bit more about it. I'm Andy, and I'm here to help everybody get through the business struggles that I struggled with when I was getting started. And of course, make sure to like and subscribe. So guys, turnover tax is a turnover tax system that's different to obviously the corporation tax that everyone pays. It's designed for micro businesses and it is a very low rate. Time to just insert a disclaimer. This isn't tax advice and I'm not qualified to give tax advice, but I can give you my opinion. Okay, so when I started out way back when, turnover tax was a no-brainer. It was a high turnover business, so there was quite a lot of net profit, and the turnover tax model works well for that. Maybe not so much on retail because your net profit's smaller, and on turnover tax, as in the name suggests, you pay tax on turnover. So as you can have a look here on the screen, you can see just a lot of this is on SARS website, so you'll be able to find out more about it, but I'm just going to break it down a bit for you. So it's obviously for businesses less than 1 million. If you're a little bit above that, then you might want to consider small business corporation tax, SBC, which I'll cover in another video. I'll try to link it below when it's done. That goes, I think, from 1 million to 20 million. So if you're in the sub 1 million and you want to be tax compliant, maybe you need to get tenders or things like that. So you need to have a tax clearance certificate. You can get that by being registered for turnover tax. Okay, let me finish explaining about it and then I'll get into the pros and cons of it. So if you have a look at the percentages, I mean, the highest percentage is like 3% plus 6,000 over 750,000. So if you were to work it out, it is 800,000 minus 750. Let's say your turnover times 0.03. plus 6650. So that's what you would pay on 800,000 Rand turnover, which isn't so bad, in my opinion. So it's for, obviously I've gone over, you can obviously work out where you would fit in there. It's for less than 1 million. There are some other requirements. You do have to obviously register for turnover tax when you go in. There are some exemptions, like you can't have two businesses, I think, both registered for turnover tax. It's got to be the only thing. And a few other nuances. You can do, like here, if you go here, there's a quick test to see if you qualify. I would go through that and make sure 100% you do qualify, because if you do, it is good savings. Same with SBC, there's a lot of qualifications to it. In terms of, I'm just going to skip through this, you obviously have to register for it, but how it works is, this is where it confused me, and there's not a lot of information on turnover tax out there. So, and I mean, even now, one of the downsides, I'm just going to jump in with the downside of turnover tax, is it doesn't feel like it's part of the SARS e-filing system. As you can see here, taxpayer must record his payment as SARS and TT as it's not catered for on e-filing. It's not like a lot of the guys, like I've been to the branch before and been like, hey, I want to pay my turnover tax, and they're like, and then there's like 3 people trying to help me pay my turnover tax, when it's not, they've made the amount less that you have to pay and the admin less that you have to keep records of, but the amount that to actually be compliant and fit in with the tech side of systems, it's much more complicated. When you go into corporation tax, it's just boom, all the forms are there, everyone knows, because you're part of the majority then. The turnover tax is a tiny little portion that gets very little attention because it's making the government not much money, but it's good for us who obviously want to take advantage of that system. So anyway, how it works is you have to do a payment on around the last business day of August. So you fill in a TTO2 form, and then you don't actually have to, don't quote me on any of this, but I'm pretty sure you don't have to send it in. Same with the TTO2 at the end of the year. And then you do have to submit a TTO3, which is, your TTO2 is your estimate, your TTO2 is like topping up to that, like your second estimate, and then your TTO3 is sort of like what you actually, a couple months after the year ends, you've sort of clocked off that year, and now you know exactly how much your turnover was in that space. So TTO3, you do have to submit at SARS. Either you take it in, I think you can fax it or something like that, but it's a bit pretty annoying. You can go and drop it in the post box, and then of course you have to pay or get a refund on that TTO3 at the end of the year. So it's a bit annoying, like you have to go, well, I always went in to do it. Maybe it's better these days, but it wasn't really very convenient for me. And like you can go in, you submit it, and then they can't like show you, like, I don't know, I struggled to get them to show me the previous returns. You really have to keep these files yourself on record. If you're in the turnover tax system, that means you don't have to cater for any of the corporation side of things. You just have to record all amounts received. So you obviously your turnover, dividends, and assets and liabilities exceeding 10,000. And you obviously have to deregister if your turnover tax is going to be more than $1 million, and la-di-da-di-da-di-da. So if your company is turning less than $1 million and you're paying corporation tax, I mean, I pray no one's out there is doing it. But yeah, go ask your accountants or whoever's helping you with your books. If you're doing it yourself, go into SARS, say you want to pay turnover tax and you want to do it that way. Do your 3 payments every year, fill in the forms, keep a record of it, and you're good to go. So if you, one last thing is, like, a lot of accounting firms even don't really advocate for turnover tax because it makes their life a little bit more difficult from what I've seen. It's not really a common thing that they try to push because the things around it are kind of vague. It's like SARS doesn't have it's not easy for them. It doesn't fit in their systems and their models. So you really do have to, if you've hired an accountant to help you out, you do have to make sure that they are, you go to them and say, look, I want to pay turnover tax, and you don't want to pay anything else. That's just about it. I struggled with a lot of turnover tax. It was a nightmare. There's not a lot of help on e-filing. I mean, this is all the information really on the site, and it's not really, it seems a bit better. You can do all this video appointment stuff, which is quite cool, but there wasn't much when I got started on turnover tax. So, summary, I would 100% go for it. This, to me, compared to like SBC or corporation tax, is like a good chunk of savings, and other than that, you really can't go wrong. So guys, I'm Andy, and I'm here to help you guys get your businesses off the ground, give you tips. I do a lot of take lot videos. You can check some of those out, and hopefully see you guys soon.